Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson, it's going to be a follow-up to last week's trade review where we gave you many compelling and actionable trade ideas for stock and option trades on what we call catch-up patterns. And that occurs when the broader markets or a sector are extended and stocks or sectors or ETFs that have been beaten down offer more opportunity to profit as money rotates into these sectors, and the pattern suggests a bigger gain also. We're technical based traders. Every one of these are bullish patterns, and then our approach then starts with a compelling pattern, and then we overlay the other concepts that make up our method, like where is it in the overall trend, support and resistance, multiple time frames, relative strength or weakness. And so many of these catch-up patterns were breakouts from bottoming patterns. There are continuations from beaten down stocks that are down a lot on the year, and they could be climactic buy setups, W patterns. So this is the S&P 500 ETF, and this is last week. So it had a bullish gap breakout. It's above the 20, 50, 200. But it was short-term extended, and this is exactly what we were thinking, particularly with some of our market internals being at extremes, too much bullishness, if you will. Pretty much the broader market went sideways all last week. So keep this picture in mind as I show you many of these trades that many are open trades and some are closed trades that we gave our subscribers, and I've received many emails from other viewers of last week's trade review thanking us for the video and all the many trade ideas because they've been profiting along the way with us. So here's one, IWM. Our ETF investment trader only trades ETFs for longer holding periods. So this is one that we are in. The arrow on all these are going to show where we got in. This was a gap wide range breakout. We bought that. We're just in trail mode. Jets have been playing catch up. Beaten down sector. Multi-month consolidation. Look to the left. This is what we call a price void, meaning insignificant resistance to allow for a move back up. Same bullish gap, breakout. Look at all the flat moving averages, also suggest a consolidation and an expansion of volatility, exactly what happened. We actually sold a third today because it continued near $20. We sold a third there. It looks great. Bank of America, as you know, particularly the regional banks have been beaten down with the regional bank crisis, but other banks have also. Again, look at the moving average alignment, the 20 and the 50 flattened out, little breakdown failure here, popped up, red bar ignored. This one was a bullish directional option trade. So this is in the open spreadsheet, open trade. Every one of our trades gives the date, the symbol, the stock or option trade. In this case, we bought in the money call options. We love buying options because of the leverage and limited risk. The technical setup, breakout of a bottoming pattern at the 20-50 MA. It's not shown, but a W bottom on the weekly, and the sector was breaking out. So notice here, one day later, we sold half at 213 for a 35% return. And now we're just in management mode. It looks fantastic. It looks like it can churn its way back up to these prior highs. Caterpillar, we actually gave two different trades. One to our advisory swing letter that trades stocks and options on anything that moves. This was in a downtrend. This was on earnings, a bullish gap, range expansion, wide range closing bar, red bar, that's a bullish 1, 2, 3. And it's also what we call a bear sandwich because this ugly red bar was sandwiched by two big fat green bars, has a price void. This one, we bought a half lot here. We're in management mode. And then we also sold in out of the money. We sell puts under support. So this one's the 220 down here under these bars. And we buy it further out of the money put to limit the buying power requirement and the max risk. and we keep this premium over time through time decay and as the stock moves in the intended direction. LNC, a beat up insurance company, bottoming pattern, flat 2050, gap breakout, went sideways. Right here, we sold an out of the money $20 put where we say we're just calling a short-term bottom. Here's my hourglass showing the concept of time decay. The premium that we put in our pocket is just decaying to zero as long as the stock doesn't close below our short strike. And we use a technical based approach in trading options also. So we start with a bias, then we decide what the best option strategy is per our bias. MPC, oil sectors were bottoming out here, bottoming pattern, flat 20 MA. You get the picture here, wide range igniting. So the option trade we did on this one was we bought a bull call debit spread. We buy an in the money call, sell an out of the money one to lower the cost basis. Technical setup, wide range breakout of a bottoming pattern at the 20 MA, strong sector, and we're still in this and looks great. This IYT or the transports, bottoming pattern, flat MAs, closing breakout, plus 2 inside bars. So we actually entered just a partial lot here, and then we would add over here. Open trade, breakout daily, weekly, General Motors, multi-month bottoming pattern, closing breakout, red bar ignored. We bought the in the money $32 calls. We sold some into strength, 42% return. Then it gapped up last Friday on some positive news with Tesla, and we just took our money and netted a combined 65% return on our long calls, 8-day beaten down catch-up trade. Met, beaten down insurance company, nice little retest, little bull 1, 2, 3 here, and we bought in the money calls. In this one, 3 days, 35% return. Nice gap, closing breakout, red bar ignored, big bottom, big price void, just another beautiful catch-up trade. We stayed in this 2 days, and we made a beautiful gain just in there. This one, another open trade. This is what we call a double bottom. On this green bar here, we sold an out of the money $3 wide put spread, 34 cents, added at 50 on Friday's little pullback, stop under the green bar. And if this takes out the green bar's high, then it's actually a directional option candidate as a nice W bottom with a price void. These are now closed trades now. You can see the different coloring here. Crocs, big move off the low. Ugly red bar being negated. So over these highs, we sold another put spread, 104, 100. Here's our line in the sand. The same concept of time decay, and as the stock moved up. And we close them into strength. You don't need to sit through anything until expiration. We manage them with the charts. We take our money, off to the next trade. DKS, wide range igniting bar here, bottoming pattern. And this one, we had such a big, we had over 50% of our max gain in 1 day. So we just took it. We took it. It was actually the next day here. So we entered this day, and then we took our money on the next day. Now these are just a couple I'm showing you that are climactic buy setups or potential climactic buy setups. We're waiting for what we call the turn. I have a little rubber band here because climactics are momentum move down far from the 20 period moving average. We're waiting for a bullish potent turn before we get on board. And in fact, we have an MT Live coming up on that. You can sign up. We'll be getting into these patterns in great detail, but this is another variation of the catch-up trade, things that have been beaten down. Now, bottoming patterns they're different. They're different, but we're swing traders, and we can profit on either one. Now, this one's trying to make the turn, but it has not yet. I have an alarm over this red bar, and then we'll see if we're confident on the turn. This is sloppier ASO, but I like the gap to the prior low, and then it took out and negated this ugly red bar, so I'll be watching this on a pullback and reversal. AAP, nasty gap on earnings. There is zero reversal yet. So I would not touch this. You see the difference of this turn over this one? Finally, HIB, this is the weekly chart. So it is by definition a climactic buy setup on the weekly chart, but there's no reason to enter yet, which our entry would be on the smaller time frame, the daily. But this is just showing you, look at this, down 75 to 35, a lot of pain there. If you'd like to get trades like this sent right to your inbox, and we update in Telegram in real time, go to mastertrader.com/advisory swing. And not only do you learn why we put on these trades, but as I mentioned, you get the live updates where you can just manage them while you're out at work, playing golf, doing whatever you like to do. Any questions, email my partner Greg Capper or me. Good trading. Look forward to seeing you in the next trade review video.